Buenos dias. All right. This light just died on me, so that just took off a little bit of time, which is probably best for y'all because I get to just pretty much cut to the chase. All right. Um, I know inside the Discord has been a little bit of conflicting, right? Mainly because I've been saying it's going to go down, which it did fall out of that bear flag. All right. Um, I did say that if we were going to find buyers, it'd be down here, or it'd be at 29 441 or 28 944. All right. Um, things just weren't making sense inside of the market. All right. We had a double top. Things are pulling back. Things are looking great to the downside. Okay. But then we found support. All right. We found support all of yesterday. And don't get me wrong, things could still change. All right. That's just the name of the game at this point. All right. I mean, just period inside the stock market. All right. Um, we had the downfall, but as I was looking at it yesterday, I was like, man, I was like, that kind of even just looks like, where is it at? Boom. My computer really getting on my nerves this morning. All right. Boom. Kind of looks like a bull flag at this point. Okay. I'm liking it. I'm liking it. All right. We did that island top, failed. Double top or succeeded. Double top succeeded. Um, everything is playing out, but as these formations do play out, new formations form. Okay. So that's something just to keep in mind, keep inside your back pocket. But that's not what really drew my attention. Okay. What really drew my attention was looking at the VIX, seeing the VIX shoot up. It came back down. You know what I'm saying? Um, the exchange rate is going up through the roof, right? And then we have was oil. Oil shot up yesterday too, consolidating nicely here at the 200 day. All right. These are very concerning. And when I say nice, I don't mean nicely as in like, ooh, this is exactly what we want. I'm saying nicely as in if this was any other chart, it's exactly what you want because you want it to go up. Okay. Right now, oil consolidating at what we definitely don't want. Okay. But it's not getting above it either. Okay. So got to see what oil does. But this also lets me know that something is in the works, something is happening. Uh, I pretty much told you. Well, I know I told you on the Discord that they started the bombing again. Trump saying he's about to spin the block, come back around, indicating that tensions are rising over there in the Middle East. Our negotiations aren't going exactly up to par. Okay, so going back and forth again, see what happens. But that's not the one thing that made it very alarming to me. Okay, all these red flags, right? All red flag, VIX, red flag. Where's it at? I just have to look it up. Where is it at? Exchange rate, red flag. Okay, 10-year still at 4.5. Love it. Okay, nah, I want lower. Not even gonna lie to you. Okay, um, Nasdaq found buyers out of nowhere. If everything's a red flag, the hell's going on here, right? Okay, this guy right here. Been focusing on this guy for quite some time now. All right, you can only see it in the day. Okay, this is probably one of the most underrated charts that you could look at. Okay, the ICE B of A US High Yield Index Option Adjusted Spread. Okay, that's B of A, Bank of America. All right, that's just their high yield. Okay, all right, there we go, beautiful. Okay, you want to see what the yields are doing. You want to see what the bonds are doing. There's there's a list of things that you want to keep track of when it comes to the market's health conditions. Okay, this definitely one of them. Okay, now this is where I'm gonna probably just paint the biggest red flag. Okay, dude, I hate it when trading does this. Does anybody else hate it when this happens? Jesus. All right, there we are. Okay, so those of you that are wondering, okay, like I said, I'm gonna make this short, sweet, and simple. Okay. It pretty much measures the extra yield investors to pretty much demand like their own high risk. All right. Well, versus the high risk junk for like the corporate bonds, things like that, instead of like the US Treasury bonds. Okay. So you got to pretty much think of this as is how much extra return do investors need to take a credit risk? All right. And I want you to really listen to that. Okay. About taking on a credit risk. Okay. From 2 to 3%. Good. That is like the best time to own junk stocks. Okay. That stocks that are just risky. You know what I'm saying? Like, go ahead, take a risk right now. If right now is a good time to say it, Bank of America is indicating it's not a bad time to take that risk because you can afford to take that risk, that credit risk. You know what I'm saying? You know what I'm saying? Trade on credit. You know, pull out a loan, things like that. Okay. Well, don't take my word exactly for that. Okay. You know, take it with a grain of salt. Okay. Anywhere from like 5 to 7%, that's high risk. That is critical. That is not good. Okay. So investors are becoming a little bit more cautious in that range. Okay. Anywhere from like, I think it's like 7 to 9, 7 to 9 or 8 to 10. I don't know. I do know. I just got to look it up. If I'm not mistaken, it's probably like 8 to 10. But from 8 to 10, that's when it's like, all right, dude, there's a lot of financial stress right now. Things are not good. Um, this is like the biggest red flag that this is not a good time to invest in risky assets such as like stocks, especially junk stocks. When I say junk, I'm meaning not like big name hitters. A lot of AI. Well, no, okay. Well, I don't want to say AI is junk, but just more risky stocks. All right, like healthcare. Healthcare is good to invest in. Financials are good to invest in. Gold, copper, usuals. You know what I'm saying? The dollar, um, silver. Silver's another one. Those are a lot more safer. All right, you're parking your money in safer places versus Krispy Kremes versus like just individual stocks on its own, right? And like safer would also consist of ETFs. You know what I'm saying? So if you're gonna invest in any ETFs, there's uranium for the global one. There's IWM. There's the Qs. Um, there's a couple of other ones else that I want to definitely look up for y'all. But oh, whoops, did not mean to do that. I need that guy right there. But this guy right here, okay? What is going on with my trading view? All right, sorry folks. This is this is a pretty good indicator that's going to give a warning of when it gets risky to own those stocks like Krispy Kreme, like um, SpaceX that just dropped, that just IPO'd, um, things like that. All right, these are great companies and everything, but right now that would just be risky. Okay, right now, this is the perfect time. We're at like 2.6. You couldn't be more in the Goldilocks zone. All right, the only time that was better than this right here was earlier this year at January, right? Popped up, but that was like last year. Popped up all the way to 4. This is when everyone started getting cautious. All right. You can go back, you can track the NASDAQ. I mean, I'm pretty sure it'll give you the same results. All right. You'll get some type of pullback, you'll get some type of feedback, right? So, boom, we get that pullback around April. Okay. Get that pullback around, see? in March lets us know. Beginning of April lets us know. Okay. This thing shoots up, you better collect your money. Okay. But you go back years and 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 years. Okay. Spikes up, spikes up. And it's not all the way to 97. Okay. This thing has been around for 97. Okay. 2000 bubble crash around here. Boom. But this one things are different. All right. This was like a whole entire different market. Okay. A whole entire different market before the housing market. Boom. 2008, 2009 starts to unravel. I mean, look how crazy that got. All the way up to the 20s. 8 to 10 is like, dude, get the fuck out, right? So you can see some type of pattern before catastrophic events. COVID, boom, right here, horrible. Okay. Right now we're chilling at the all-time lows. Okay. Yes, as we do proceed, eventually the inevitable is gonna happen. Okay. But it's low right now. This is a really good time to invest in all those stocks. What are you gonna do? You're gonna start investing when it's on the peak right there. No one can call the top. No one can call the bottom. Okay. This is where I say this is the biggest red flag. Okay. Hope y'all are definitely following along here. I wanted to put a little bit of more emphasis on that because of what I'm about to show you next. Okay. Right here. If Bank of America is urging investors to take profit, saying roughly 70% of its bear market indicators have been triggered, level consistent with past market peaks, the bank warns US stocks are broadly expensive, speculative. Okay? Warns US stocks are broadly expensive. I can concur to an extent, right? Depends on what you're investing in. Depends where you're looking. A lot of clothes are expensive too. You go to certain stores, you can get a t-shirt for $5. You go to Dillard's, get your Lacoste, that shit's gonna cost you like $100. 150, 120. Right? Speculative. I think it's more subjective. Okay. So with that being said, if it is such a detriment to invest into stocks right now because they're so expensive, how in the same week you gonna turn around and hand a $520 million credit line to OpenAI to bid for IPO spot? I thought it was such a bad time to invest right now into risky stocks. And everyone's been screaming about how AI is so risky, especially y'all. So how you gonna tell me? How you gonna tell the public one thing? Where is it at? Right here. But then go in your own indicator that you say is screaming out bearish, is screaming out the best time to invest. And what do you know? They give a risky stock 520 million lines of credit. If they're making so much money right now, which we all are very, very, very well aware of, about how crazy amount of money that OpenAI is making, because I know y'all know they're like in the dark right now. There's a reason why they haven't gone public. Okay, supposedly they're making all this money. They're making so much money. Why do they need a $520 million line of credit? And they're making billions. Is anyone else following me on this? I'll end it there. Have y'all thinking. Okay. It's exactly where I want to keep y'all today. I want to keep y'all thinking when it comes to that statement alone and how and why we got this nice reversal. Okay. Switch to the 4 hour. So, to be honest, I do see us revisiting this 50 SMA. Probably come back, test it again. If we can get above that the 200 SMA, we're really gonna get moving. And I think we now form a golden cross, and I think we actually come back up, get above. I think the 50 SMA comes back up, gets above 29,980, and then we mount 30,319, and then we're looking for 3520. Okay. Um, might take some time. I don't think it's going to be such a sudden rush, just because I think they're moving and shuffling things around right now. All right. Um, if not, then we come back down to the strong level of 29,441, and then we revisit this area again at 28,944. Okay. But keep that in mind, folks. How you going to tell the public it's the worst time to invest? But then you go and you open up a line of credit, crazy amount for one of the companies that are supposed to be earning one of the most, if not the most, amount of money right now. They haven't even gone public yet, so that's why no one really knows how much they've earned. It's just all, yeah, we're making a lot of money over here. Y'all see what I'm saying? So leave that with y'all. Y'all have a great day. Thank you for your time. And hate to say it, but subscribe. Don't even have to like the video, to be honest with you. Just subscribe. That way you can get these notifications. Hit that little bell. And that way you can listen to stuff like this, okay? So, have a great day. Adios, amigos.